This last month was the month in which I deposited the most amount of money into my investment account ever. This month I invested over $5,500 of new cash into my portfolio to boost my dividend income. This has resulted in my portfolio now being worth over $36,000, which is up tremendously from the last update. Some of my new buys this month are actually quite different from the rest of my portfolio, so I think you will find them quite interesting. So that is why in this video I will be doing my monthly update for my personal stock portfolio, going over everything such as buys, dividend income, and plans for the future, so let us get straight into it. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. Firstly, let us go over the dividend income I received since my last video, and to be honest, it definitely isn't very much. The month of November and early December had very little in dividend income, and I was only paid out by two different companies. The first of which was Apple, ticker AAPL, which paid me just over $5 in dividends on the 16th of November. The second stock that has paid me since my last update was Visa, which paid me on December 1st, and they paid me $8.46. In total, my dividend income for this month was a measly $13.63. This is definitely not reflective of my actual average monthly income, as these are two of my lowest yielding stocks, but nonetheless, that's what my income was for this month. Now, let us go over my buys this month, and this month I spent over $5,500 on stock. With this cash, I got some pretty high yielding dividend stocks and also added nicely to some of my existing growth positions. I will reveal all of them, going from my least biggest buy and going from there. Starting with the smallest purchase, we have VTI, which is the Vanguard Total Market Index Fund. I bought exactly one share of this ETF, which isn't a lot, but that is because it is an average price of $226.92, which is a fair bit above my cost basis. There isn't a whole lot to say about this, but it is my anchor position in my account, one that makes sure I do not drift too far away from the market's total return. The second stock, a stock I have now bought for 2 months in a row above my cost basis, is Broadcom, ticker AVGO. My cost basis was actually around $630 if I'm correct, but now it is around $680 because I bought 0.75 shares of the stock at an average cost of just over $910. Now, this is a lot over my original cost basis, around 50% more in fact, but this is a stock I am happy to keep adding to even if it is above my cost basis. I easily see more upside in this stock, and I can see this stock crossing the $1,000 mark in the not so far future as the world becomes ever more dependent on technology. In addition, this stock still yields pretty favorably, more than the market average, so even if you are looking at Broadcom as just a dividend stock, it isn't too bad. This stock is one of my most important positions going forward, and is one I think my grandchildren will be thankful that I invested in, so I am happy to load up on new shares, even at a relatively high premium. The next biggest position I added to this month was the Coca-Cola Company, ticker KO. I bought 17 shares at an average cost of just over $58.50. This stock is a company that drowns in cash and, to be honest, doesn't need much of an introduction. This, like VTI, is one of my anchor positions, one that I don't think I have to worry about too much, and one that I do not plan on selling. Like Broadcom, this purchase did raise my cost basis by a fair bit, but I still think that current prices are respectable. At under $60, Coca-Cola still seems to be fairly valued, and I will continue to buy shares at around these prices. However, with this new addition into Coke, I am probably not going to be buying any more shares soon unless prices become really unbelievably great. They are a great stock to retain value, but I don't think it is one that I'm going to be making one of my biggest positions going into the future, which is a mistake I made earlier in my portfolio investing journey. Anyways, the next stock on this list is definitely a controversial one, and it is a new one in my portfolio. It is the Altria Company, ticker MO. I bought just over 33 shares of this company at an average cost of $42.60. This stock is one that I've talked about briefly recently in a video, but long story short, they are a tobacco company that owns brands such as Marlboro within the United States. This stock, in my opinion, is not a long-term position. Declining smoking rates in the United States can only be patched up so much by alternatives such as nicotine pouches and vaping. Even if Altria continues to raise prices on their cash cow premium products such as Marlboro, this can only go so far. However, if Altria can turn it around with vaping vaping and tobacco alternatives, this might be one of the best long-term plays, but I find that to be unlikely. At the end of the day, the reason I'm buying Altria is because of that super high yield and the added dividend income. Even if it isn't going to be sustainable, looking into the next few decades is still fantastic. Lastly, my final new position is the first REIT ever in my portfolio. It is Vici Properties, ticker VICI. I bought 75 shares of this REIT at a cost of $30.30. This is my first REIT I have ever owned, and I decided to pick this up instead of Realty Income. Even though Realty Income pays monthly and has a higher yield, there are some things with Realty Income that I don't like, and things with Vici I like more. For example, I think Vici's portfolio is better than Realty Income's, and Realty Income's issues with share distribution can be worrying. Either way, this is still a smaller position in my account, all things considered, but because of Vici's high yield, it has added nicely to my dividend income. Overall, after adding $5,604 to my account, I added just under $304 of annual dividend income. This is a yield on cost of just around 5.4% for this new allocated cash. This dividend yield is way higher than my average for my account, but I think it helps balance out my growth positions nicely. Talking about my sells, technically this month I didn't have any, but also technically I did. During this month, I did buy a little bit of low stock, literally less than a single share, but after the stock continued to rise, I decided I didn't want to keep adding to the stock. Rather than having a position of less than a single share, I decided to sell out of lows. Even though this was a sell, it wasn't a stock I owned in my last update video, so I'm not really gonna count it. So as you can see, here is my portfolio, and if you're wondering why this definitely looks different than my older videos, this is because I'm currently using Ryne William's Google Sheet stock portfolio tracker rather than just Fidelity itself. This is something I'm super new to and I don't really fully understand yet, and it's also something I'm kind of just experimenting with. If you guys don't like this, I will go straight back to Fidelity, but it's something I just wanted to test out. Though I do think it is pretty interesting and does help give some insight into my portfolio. Anyways, if you're wondering why I look different, that's why, and I will also put a link to Ryne Williams' video about this portfolio tracker in the description below in case you want it yourself, because this is not mine. Anyways, as you can see, these are my positions, and my market return total has been 11.32%. This might seem pretty low, but it's worth noting that I redid my portfolio pretty much entirely earlier this year, which is why the unrealized gains are pretty low. If we actually go into Fidelity and look at my actual portfolio, as you can see, the year-to-date gain is 29.51%, which is huge when compared to the S&P 500, which is only up 20% in that same period of time. So as you can see, I'm still beating the S&P 500 by what is a pretty decent amount in basically all four of these metrics: 1 year, year to date, 3 month, and 1 month, which is ultimately my goal with this portfolio. Anyways, let us go into each of these individual positions and I'll just go quickly over my opinion on them. For the Vanguard Total Stock Market Index Fund, which actually doesn't even fit in the spreadsheet, this is one I talked about earlier. It's one that I currently just want to own because it is a good anchor position. I'm not a huge fan of ETFs in general, just because I think that if I put in enough research, I can pick better stocks. However, VTI to me just makes sense because it is the overall stock market and it is a great way to get a ton of diversity. And that is something you simply couldn't do with individual stocks unless you want to literally go out and buy a ton of different shares in a bajillion different companies, which is not something I want to do. In my opinion, this is the ETF that if I don't know what I want to buy, this is just what I'm going to put money into, no questions asked. However, if I think there are better buying opportunities out there, I will definitely put my money there, but that isn't always the case, which is why I have VTI as my biggest position. The second biggest position in my account is the Microsoft Corporation, which is up around 15%, which means it's been doing super well in my portfolio. This is one of my favorite growth stocks, and it is up to over $370 a share, which is just a ton. It seems very likely that Microsoft will be able to hit a $3 trillion market cap going into the next few years, or in even less time than that. I really love Microsoft still, and it is absolutely going to be one of my most bought tech stocks going into the future. I have nothing really to say about Microsoft more than that though. It's a company that we all know and love, and it also isn't a company that I've done anything to recently. I haven't bought any shares, I haven't sold any shares, I haven't received any dividends, so that's all there is to say. The third biggest stock in my position is Broadcom, ticker AVGO, which I did buy new shares of this month, and as you can see, I'm up to a nice and even 5 shares. This stock, like Microsoft, is going to be one of my core technology funds going into the future, and I think they are one of the best companies out there because because of their solid growth. They also have very dependable income because of their deals with companies such as Apple, so they're definitely less risky than some of the other chip manufacturers out there, which is something I'm trying to avoid. I already talked a good amount about this, but I'm up 35% on this stock, which is absolutely fantastic. And I was up around 50% on the stock earlier before I bought that share and increased my cost basis by a pretty sizable amount. My next biggest stock is Apple, and you're probably noticing a trend right here. The top 3 biggest individual holdings in my account are technology related. Although this may seem worrying, I am a younger investor and I'm able to take more risk with my positions, which is exactly what this shows. Apple, like the other tech positions I've just been talking about, is up 18%, which is absolutely a ton, and the share price is just crossing $193. Apple is a $3 trillion company, which is pretty absurd to think about, but they are the biggest company in the world by market cap. This stock, as long as they keep doing what they're doing, especially their expansion into software and Apple services such as iMusic and the App Store, is a company I will never sell, because the cash flow opportunities with this stock are just so massive, not only in terms of growth, but their dividend payout ratio is super low, so if they wanted to grow their dividend, they absolutely could. The next stock on this list is Visa, and this is my favorite financial stock, which I've mentioned a few times before, and I am up just under 6% on this. Now, Visa currently is sitting pretty expensive. It is absolutely near my 52-week high, which as you can see is actually a common trend with most of my stocks, but it is still a stock that I absolutely love just because of the fact that it is a super cash-rich business. This stock is a compounding machine that is able to grow its dividend at a super high rate, meaning owning it now will eventually lead to a super high yield on cost. This is ultimately my goal, as hopefully going into a future, maybe a decade or so, the yield on cost on my current shares might be nearing 3% or so, which is absolutely fantastic to think about. Now, the next stock on this list is JP Morgan Chase & Co., which is my favorite bank stock and is the bank that I bank with personally. Now, there are more reasons that I like this stock than just banking with it myself, such as the fact that it is the biggest bank by market cap, it has a relatively respectable PE ratio, it has a pretty good dividend, and they also have the largest consumer base within the United States. For all these reasons, this is my favorite bank by far. The other very important aspect that you need to talk about when talking about JP Morgan Chase & Co. is the fact that they have fantastic leadership under Jamie Dimon. I would not be surprised to see going into the next few decades that when JP Morgan eventually gets a new CEO, the company stops performing as well. That is something I do not have to worry about for the foreseeable future. Anyways, this is my second favorite financial stock behind Visa and is a stock I'm happy to own, and I am up around 10% on this stock overall. The next stock on this list is the United Health Group, ticker UNH, and I am up almost 13% on this stock as the share price is over $550, which is just a ton. I would love to add more shares to my United Health Group position, however, my cost basis is sitting very nicely at under $490. Because of this, I do not really want to add to it at current prices. However, if United Health Group, for whatever reason, was to go back under $500, I would absolutely be buying more shares. There isn't too much to say about United Health Group. Overall, healthcare is just super expensive within the United States, and someone is going to be profiting off that, and United Health Group is the biggest health insurance provider in the world, which is why I am an investor in them. The next stock on this list is Vici Properties, one of my new positions and is my first REIT. And as you can see, I am technically down on the stock. I am down 0.13%, but I'm not super worried about that as that is literally nothing. The stock is basically halfway between its 52-week low and 52-week high, so there's absolutely more upside with this stock. Their investment portfolio, especially some of their positions that they have in Las Vegas, to me are super interesting and is the reason I invested into this REIT. The dividends from this company are absolutely fantastic and are going to add very nicely to my overall dividend income. The next stock on this list is the Coca-Cola Corporation, a stock that needs no introduction. I basically own Coca-Cola just because it's a super simple stock that I don't need to worry about. There isn't a whole lot to say about the stock, so I'm probably not going to really say anything. However, if you can buy Coca-Cola shares at under $59, I'd say that's a pretty decent price. However, Coca-Cola has fallen as low as $52 recently, so maybe just be a bit wary of that. The Altria Group is the last stock on this list. It is my smallest position, but it is one of my highest yielding positions as it yields over 9%. My average cost per share is $42.60, and I'm currently down 0.07%, which again is basically nothing. This stock is one that I am very interested to see what happens into the future. This stock could either go bust in the next few decades due to the fact that smoking rates are declining so quickly in the United States, or this company could make a massive turnaround with vaping and other alternative tobacco products. If the latter comes to reality, buying Altria Group stock right now might turn out to be one of my best plays yet, but I do find that unlikely. Altria, in my opinion, might not be a long-term position of mine, but is still a company that I do think is okay to own because of the low PE, and it does add a ton to my dividend income, which is just a great thing. Honestly, going into the future, I could see this being an issue. I might want to sell out of Altria Group in the next few years, but the dividend income might be so good, I might just not do it, which could end up being a bad thing. However, that's just a hypothetical, and overall, I don't think there's anything super alarming with the stock, at least right now, but going into the future, that could definitely change, especially if Altria's pricing power does decrease, as Altria as a company relies so heavily on increasing their prices to maintain high revenue. Anyways, looking at my annual dividend income, as you can see, I'm going to be making around $726.75 of annual dividend income. My highest yielding stock is Altria, making up $128 of this income, despite the fact that it only makes up 3.88% of my account, which is just hilarious to see. My smallest position is making me the most dividend income. This gives me a dividend yield of just around 2%, which is absolutely perfect. That is the yield that I want to see. And my yield on cost is higher than my dividend yield, which is absolutely something you want to see. As my dividends grow via both dividend growth and dividend repurchases and reinvestment, seeing my yield on cost grow over time will be absolutely fantastic, and is also something I'm looking forward to. Anyways, that is basically it for my dividend portfolio. I'm sitting at just under $37,000 worth of stock, and my annual dividend income is sitting at $726. This is the highest my dividend portfolio has ever been, as 37 grand is way more than last month. This is due to the stock market not only doing well, but of course due to my new purchases. Thank you guys for watching this video. If you enjoyed the video, especially if you like some of the changes I made to my portfolio, make sure to comment why down below. If you think there's anything I can improve on though, let me know as well in the comments section. I'm really interested to see what you guys think about some of my new buys, especially Altria. I hope you guys all enjoy these monthly updates. I am looking forward to growing this portfolio slowly but surely. My ultimate goal with this YouTube channel is to have this portfolio reach $100,000 at some point, but that will definitely be a slow process. Anyways, I will see you all in the next video. Goodbye.